Assalamualaikum warahmatullahi wabarakatuh. My name is Nura Smida binti Abdullah and my matrix number is 105902. Today, our group Money Master will present financial statement analysis for Dutch Lady Milk Industry and Nestlé Malaysia from 2022 to 2034. So for the content overview, we will have introduction, financial review, ratio analysis, managerial insight and recommendation, and lastly is the conclusion. This is our group member. The first is Shim Loi, myself, Nura Asmida binti Abdullah, and Ophelia Uri anak Riki. Next is we have Tibashini, Shamuga Priya, and Dachayani. So first, I will start with Dutch Lady Milk Industry. They start their journey in 1963. For over 60 years, they have been a trusted partner for Malaysian families. They specialize in high-quality dairy product, nutritional powder for infants and growing children, and their liquid milk in UHT. Their product is simple, which is providing high-quality dairy products that people love and trust. In terms of business performance, 2034 was their massive year for them. They achieved a total revenue around 1.45 billion. This shows that even after 6 decades, the brand is still growing. Finally, Dutch Lady is investing heavily in the future. Just this year, they moved to a brand new ultra-modern factory in Bandar instead. So these are the example for Dutch Lady products, like their liquid milk in UHT milk, strawberry milk, chocolate milk, and a lot of various type for the liquid milk. And these are like infant nutritional powders. This is the new factory for Dutch Lady Milk Industry in Bandar instead. This is Nestlé Malaysia, a leader in food and beverages. Nestlé has been in Malaysia since 1912, starting in Penang. Today, they are a household name with over 500 halal certified products, including favorite like Milo, Maggi, Nescafe, and KitKat. They continue to innovate their products like the KitKat chocolate drink and KitKat dark bonio, which use local cocoa from Sabah and Sarawak. Operationally, Nestlé is really big, where they run 6 factories and employ more than 5,000 people. In 2034, this massive scale have then achieved a total revenue of 6.22 billion ringgit Malaysia. Finally, Nestlé is committed to environment, where through Project Relief, they are replanting Malaysia forests and they have already moved to 80% recyclable packaging. So these are the Project Relief. And this one is the Nestle product, where there is Milo, KitKat, Maggi, and Nescafe. So for the purpose of this report is to look at the money and the performance from Dutch Lady and Nestle from 2022 to 2024. Our group want to observe which company is stronger and more profitable. In that case, we will calculate and interpret the 8 to 10 key financial ratio. Our group aims to provide managerial insight into their liquidity, profitability, and market value to assist these industry leaders in making informed decisions.
Hello everyone, I'm Shanmuga Priyanilmika and my matric number is 107370. So now I'm going to compare the 2022 until 2024 financial performance of Malaysia top F&B, which is Dutch Lady and Nestle. We will analyze how both navigated the post-pandemic market through different growth and stability strategies. Let's start with Dutch Lady. Dutch Lady achieved aggressive growth with revenue hitting by 1.45 billion in 2024. Most notably, their net profit more than double, rising from 46 million to 96 million. In just 3 years, these prove they are operating much more efficiency as they scale. Their balance sheet reflects this expansion, with total asset now existing around 1 billion. This is largely due to their massive investment in the new Bandar estate hub. While liability rose to support this, shareholder equity also grew, showing a healthy increase in overall company value. The cash flow highlights a building for the future strategy. They reinvested over 132 million into capital project in 2024 alone. While this has reduced their cash on hand to around 47.8 million, the shift toward positive financing suggests they are strategically using a loans to secure long-term market dominance. Nestle is focusing on lean excellence. While revenue dipped slightly to around 91.4 million, their gross profit grew every year, proving superior cost management. Despite 2023 slump, net profit surged by 96% in 2024 to 30.5 million, driven by aggressive internal cost cutting. Nestle is becoming more heavily leveraged. While assets grew to around 139 million, liabilities rose faster, crossing 102 million ringgit Malaysia. Consequently, shareholder equity dropped to 3.6 million, signaling a strategic shift toward using borrow money to keep the business competitive. Operation remains Nestle's strength, with operating cash flow rising to 16.7 million. They are using this cash to fund incremental equipment upgrades and manage debt. Unlike Dutch Lady, massive expansion, Nestle is focused on consistent, steady reinvestment to maintain stability. Thank you.
Hi sir, I'm Tivashini Manimuthu and today I'm going to explain about the liquidity ratio and efficiency ratio. For liquidity ratio, there is current ratio and quick ratio. The data reveals two distinct corporate strategies. Dutch Lady focuses on financial stability. It maintains a healthy liquidity buffer, which is current ratio 0.84 and a conservative debt level 1.14, while showing strong growth in profitability and shareholder earnings over the 3 years period. In contrast, Nestlé operates a high efficiency, high risk model. It moves inventory faster than Dutch Lady, but carries significantly more debt, which is 5.67, and maintains very thin liquidity, which is current ratio 0.55. While Nestlé historical had higher margins, its 2024 results show a sharp decline in profit margins and EPS, suggesting that its aggressive financial structure is currently under pressure compared to Dutch Lady steady upward trend. This is the graph that clearly shows the ratios. So for the current ratio, Dutch Lady has the highest ratio than Nestlé, which is 1.12 in 2022, and in 2023, Dutch Lady has 0.8, which is higher than Nestlé, and in 2024, Dutch Lady has 0.84 current ratio, which is also higher than Nestlé. And for quick ratio, in 2023, Dutch Lady has 0.59, which is higher than Nestlé, and in 2023, 0.32, which is also higher than Nestlé, and lastly, in 2024, 0.37, which is higher than Nestlé, which is 0.2. This is the efficiency ratio part. There is two ratios to calculate, which is inventory ratios, inventory turnover ratios, and receivable turnover ratios. Dutch Lady demonstrate a lower risk profile with stronger liquidity, which is 0.84, and conservative debt, which is 1.14. Its profitability and EPS, which is 1.51, are trending upward, supported by efficient credit collection. For Nestlé, high leverage efficiency prioritizes aggressive asset use and high inventory turnover, but operates with thin liquidity, which is 0.55, and high debt, 5.67. A sharp 2024 decline in net profit and EPS suggests this high-risk model is currently facing more pressure than Dutch Lady's. This is the graph for efficiency ratio. For inventory turnover in times, Dutch Lady is higher than Nestlé, which is 4.3 in 2022. For 2023, Nestlé is higher than Dutch Lady, which is 5.08, and for 2024, Dutch Lady is higher than Nestlé, which is 4.04. And for receivable turnovers in times, Dutch Lady has higher times receivable turnovers, which is 3.64 in 2022. In 2023, Nestlé is higher than Dutch Lady, which is 4.82, and in 2024, Dutch Lady has a higher than Nestlé, which is 3.98.
Net profit margin. Dutch Lady demonstrated a steady upward trend, rising consistently from 3.45% in 2022 to 6.69% in 2024. This indicates enhanced operational efficiency and pricing power. In contrast, Nestlé margin remains stable, near 9.3% before declining significantly to 6.68% in 2024. By the end of this period, Dutch Lady successfully closed the gap and slightly surpassed Nestlé in profit efficiency. Next, we see the same pattern in return on assets. Dutch Lady efficiency climbed every year, peaking at 9.57% in 2024. Meanwhile, Nestlé return on assets fell from 19% to 11.51%, while Nestlé still produced more profit per ringgit of asset. Their downward trajectory is a major contrast to Dutch Lady growth. Nestlé maintained an exceptional high ROE, which is return on equity, though it dropped from 102.6% to 68% in 2024. Dutch Lady ROE has nearly doubled since 2022, reaching to 20.58%. It is important to note that Nestlé's much higher ROE is largely driven by its aggressive use of debt. When we look at leverage, we see two completely different financial strategies. Dutch Lady maintained a conservative approach with a stable debt-to-equity ratio of 1.14. This keeps them financially secure, as shown by their strong interest coverage of 19.56 times in 2024. Nestlé, however, used an aggressive strategy. Their debt-to-equity ratio spiked to 5.67 in 2024. While this high debt helps fuel their high return on equity, it has caused their interest coverage to drop from 20 times down to 9.49 times. This means a much larger portion of Nestlé earning is now being consumed by interest payments compared to Dutch Lady. Finally, in terms of market performance, Dutch Lady earning per share EPS has more than doubled, growing from 0.72 in 2022 to 1.51 in 2024. Nestle EPS reached a peak of 2.81 in 2023, but suffered a substantial drop to 1.77 in 2024, aligning with their overall profitability decline. In conclusion, while Nestle remains the industry giant, Dutch Lady is a winner for the growth momentum. It has closed the profitability gap, maintained a much safer debt profile, and entered 2025 as a more efficient, resilient competitor. Thank you.
My name is Dashani Selvendra. My matrix number is 103753. So I'm now going to explain managerial insights and also recommendation. For the first, I would like to explain managerial insights, which is explain the financial ratio analysis from 2022 to 2024. It reveals the clear differences in the financial performance and strategies that the milk industry Berhad and also for the Nestlé Malaysia Berhad. And as for the liquidity ratio, both companies records below the ideal benchmark, which is 1.0, indicates the short-term liquidity pressure. Even though both companies is below the benchmark, but Dutch Lady consistently maintains strong liquidity than Nestle because Nestle working capital strategies increase short-term financial risk. As for the next one, from point of profitability, Dutch Lady shows a steady improvement supported by the rising net profit margin, which is ROA, return on asset, and ROE, return on equity, and EPS, earning per shares. And as for the Nestle, they despite their stronger performance in the early year, and after that they experienced a decline in profitability indicators in 2024, it is suggesting higher cost pressure and reduced efficiency. And as for the next one, from the leverage and financial risk, Dutch Lady maintains a conservative capital structure with a stable leverage and a stronger interest coverage, just reflecting the lower financial risk. And in contrast to the Nestle operates with a higher leverage and declining interest coverage, increasing its exposure to the financial risk. And lastly, for the operational efficiency and shareholder value, the Nestle outperforms the Dutch Lady in inventory turnover, indicating more efficiency inventory management. But however, Dutch Lady demonstrates stronger receivable management and a consistent of EPS growth, which is signaling more stable shareholder value, while Nestle declining in EPS in 2024 raises concerns over earning sustainability. So as for the next one, I'd like to explain the managerial recommendation. So the first recommendation is to strengthen the liquidity and also working capital management because both companies should improve short-term financial stability by accelerating receivable collection and also tightening credit policies and also optimizing inventory levels to reduce cash tied up in the stock because it will maintain the adequate cash buffers will enhance their ability to meet short-term obligations and reduce dependence on the external financing. And as for the second one, it will enhance the profitability and also operational efficiency because management should focus on controlling rising operating and production costs while improving productivity through the process optimization and technology adoption. Because the strategies pricing supported by the strong brand equity can help protect the profit margins and ensure the sustainable profitability despite the cost pressure. And as for the last one, it is they could optimize capital structure and manage financial risk because the both firms should maintain a balanced debt equity structure and closely monitor the interest coverage, especially in the periods of rising interest rates. Yeah, and also aligning financial decision with long-term sustainability goals will reduce the financial risk and support a stable earning and shareholder confidence. That's all from me. Thank you.
Hello sir, my name is Ophelia Uri Anariki and my metric number is 105999. Now I'm going to present about conclusion. To wrap up our study, it is clear that while Dutch Lady and Nestle operate in the same industry, they are currently navigating a completely different stage of their business life cycle. While Nestle focuses on its role as a major market dedicated to sustainability and operational excellence, Dutch Lady is in the middle of a massive strategy transformation, highlighted by their 600 million investment in the new Banda estate. Furthermore, looking at the actual performance, Dutch Lady is showing a great momentum as their profit margin improved and their earning per share rose steadily. But on the other hand, Nestle EPS took a sharp hit in 2024 which shows that they are facing much tougher competition in the market. In addition, the two companies are taking very differently financial risks. For Dutch Lady, they have stayed safe with a stable debt to equity ratio of 1.14, while Nestlé ratio jumped to a staggering 5.67, meaning they are relying much more heavily on borrow money to keep their company or business running. Finally, both companies need to be careful with their spending, as both have recorded short-term liquidity levels below the idea of 1.0 benchmark. Moving forward, if Dutch ladies stay disciplined with its cash and Nestle focus on their spending or trimming its debts, both companies have the power to turn these challenges into its opportunity, proving that with the right strategy, they can continue to nourish and lead the Malaysian market for decades to come. That's all from our teammate. Thank you, sir.